Hey, everybody. Welcome to the second episode of Doc's Investing RX, where we diagnose your portfolios, prescribe the best remedies for long term financial health. I'm your host, Doc. Now, this was one wild week in the market. All eyes were on NVIDIA earnings, and while the market was soft going in, there was this hope that NVIDIA would carry the market out of the slump and put it back on track. After earnings were released, we had a bump up to a high of about 135 before the market took it all the way down into the 110s. Now you have to ask yourself, why is a company worth $135 in the morning and 120 in the afternoon when nothing has fundamentally changed in the company? And this is the reason I always remind folks that you want to be an investor in the company. You don't want to worry about fluctuations in the stock price. These prices are manipulated. There's no difference in Nvidia, the company, between the morning and the afternoon, despite the price of the stock being different. You just have to be patient, ride the waves. And in the long run, you will be fine if your company's solid. So, an important lesson for all of us: the market will pressure us to sell. It will push your portfolio down. You will be down multiple percentages. But if your thesis is still intact, if you still believe in the company and the company's not going anywhere, there's no reason to be panic selling. These emotions will make you make rash decisions that you will later regret. It has happened to all of us. It is a very normal and natural human emotion. But the way to think about these trades, these stocks, is that they are on sale. When you purchase an item, say a nice shirt, and a month later, you find out that the price got cut, do you start panicking? Do you just hate the shirt all of a sudden and try to sell it? Or do you start thinking that maybe this is a good time to buy another one, right? And so when it comes to stocks, you got to think the same way when the stock price goes down. This may be a good time to add. This is the time to dollar cost average and not necessarily spend all your savings on the sale because, again, it may be discounted further, but in the long run, these shares will gain value if the company is solid. These companies gain value as long as they're profitable businesses. So you have to trust your gut, trust your instinct on your investments. If you see a red tag sale, that's the time to buy. You don't want to be selling your stocks at a discount, right? If you're selling your stocks at a discount, that means you're undervaluing your stock. You're undervaluing yourself and your investments. And that is not the way you want to be trading. That's why, as a good reminder for everybody, think about being an investor, not a trader, right? Traders are going in and out of these stocks between the same day, multiple days, or weeks. But an investor buys and holds these companies for the long run. And that is where the money is made. You look to famed investors like Warren Buffett, use a buy and hold strategy. The only time he bailed on a company was down the line if the company no longer has value for the price or maybe to take some profits. And that's the way you want to look at these stocks as an owner of a company. If it's failing to live up to your expectations, that's when you want to sell, not because the market is telling you the price of the stock has dropped a few percentage points. With that said, let's go ahead and dive in on a portfolio. Today we have a guest from the After Hour community, Purple Pants. Okay, Purple Pants, you are rocking a $223,000 portfolio, a very nice portfolio indeed. Can you tell me more about it?
Yeah. So after this crazy week in the market, my portfolio right now is a bit more conservative than it typically is. I only have a couple of options out there that are open right now. Selling some puts, just kind of taking a conservative stance and invested in a few indexes this week. And I was just sort of waiting to see where everything was going to turn out. But next week it should be a bit better and probably a bit more risky.
So, what is your investing strategy when it comes to this? How long have you been investing for, and how do you approach the market?
Yeah, so great question. I have been managing my family's stock portfolios for the last 10 years, but only recently got into trading options, like literally within the last like 6 weeks. And so my strategy has always been um, more conservative compared to options trading. However, a friend of mine was like, "Hey, you can make like so much more money trading options. Like, it's pretty easy. Like, here's some ways to do it." And so I just kind of dove in and made a couple of really, really great trades. And I think now looking back, like really lucky trades. And so it kind of like hooked me. And I've just been researching so many different strategies to kind of see what works for me. I've tried like scalping. I've tried seeking out different stocks based on the Minervini method, looking at moving averages. I've also done some research on like moving averages and technical analysis, and also seeking fundamental analysis, and really just trying to figure out where I'm going to land in terms of strategy, and really just researching all the different strategies out there at this point.
Okay. Now, how much money are you putting towards these option strategies, these gambles, shall I say?
So to start with, I was like, using maybe half of my portfolio. And then in the last few weeks, I was pretty much using all of it.
Okay. So, just to clarify, I noticed that when I look at your portfolio, you have a good chunk of it in VOO, and then you have some in Costco,
Mhm.
Visa as well. So, is this your entire portfolio and you're using half of that, the half of the $200,000 towards options?
Well, so after, this week, I was like putting things into more conservative indexes and individual stocks and equities. So right now, my portfolio looks like I don't trade options at all. But come next week, I think I'm going to start, making more options trades again. And after the first half of February and watching everything sort of like, increase and then like this sharp decline, I will probably be more conservative on how much of my portfolio is put towards options. It will probably more be in like the 25% range moving forward.
Okay. So, after those 2 successful option trades that you said went extremely well, after that, how many of your option trades have gone well?
About 60%. And a lot of that, I was doing like spreads. So a lot of that was, I was banking on losing one or more and kind of trying out different option strategies as far as hedging. So, expecting to lose a few contracts and then win a few contracts. So after this month, it's about a 60% win rate.
Okay. Well, at least that's more than half. Now, do you set up a stop loss or do you ever leave a trade?
Yes, definitely. I started out with a pretty conservative stop loss of 25%. And then after sort of watching the markets and what happens with these options, my stop losses are now at 50%, just because they can really vary so much. I realized I was leaving a lot on the table. And especially if somebody doesn't have the time to be watching their portfolio every day, I think that it's worth it to put a higher stop loss of like say 50%. So that way, you can have these swings, but then once it swings up, you have the opportunity to actually profit.
When do you take your profits?
It kind of depends on my strategy. When I was, messing around with scalping, my profits were, 3, 4, 5%. Those were like super, super quick trades. And when I'm looking at holding an option for, say, 1 week, I'm probably looking at the 15%, 25%, 35% range. If I'm looking at more long term, or if I really believe and have like a really good thesis in one of these stocks, then sometimes I'll go 50% or higher. And I've also figured out on my brokerage account how to do like trailing orders for selling or exiting an option. So what I'll do is I'll have the mark of the stock price. That will be the signal to actually open the trailing stop order. So then the order will trail up and I'm not going to lose out on profits if I say I had a 25% stop and it actually went up 200%. The trailing stop can take advantage of those profits.
Okay, but when you actually purchase an option, what's the expiration date for it?
I would say mostly I'm going like 2 weeks to 30 days to expiration. However, if I want a more conservative play, I'll go 6 months out, even 1 year out. Um, and just sort of leave it on the back burner just because, you know, it'll make money eventually.
Okay, and then I noticed you sell puts, so you've been selling options as well as buying options. So you're doing both sides of the coin, is that
Yeah.
right?
Yeah,
Okay.
definitely.
Okay, so at least looking at your portfolio, I got to say that huge shout out for the VOO. Now I know that it is something
Yeah.
that you just started, and it is I don't want people to think that VOO is a loser's way out or super conservative. VOO is actually a very strong and actually moderately aggressive approach. So if you're looking for a long-term financial health, VOO is actually a very solid investment because you are guaranteed returns on the average of 7 to 10% every year. And the last 2 years was actually 20%. I think that if you are trying to build long-term wealth consistently, it's always smart to have a good stash of VOO and never touch it. So then that way you're always guaranteed something in the end when it's all said and done. Uh,
Absolutely.
Now, when it comes to option trading and so forth, I'm glad to hear that you've considered option selling. Now, that is where the money is. So it's a little bit, again, on the more conservative side, but option selling is you're getting paid to do the work, right? All you're doing is you can sell puts on your favorite stocks, stocks that you wouldn't mind owning at good price levels. Now, how do you determine your strikes is very important. And so that's why I'm
Mhm.
curious, you're taking this very large educational expense, right, by risking half your portfolio on option trading. And so what levels do you choose when looking at these stocks? Do you know how to evaluate the charts?
Yeah, so I'm learning more and more about fundamental analysis and technical analysis. For selling puts, of course, a caveat is you kind of have to have a bankroll in case you get assigned, or at least margin on your account. So if you get assigned, you're going to have to buy 100 shares of whatever stock it is that you sold the put on. So luckily, I'm in a position to be able to do that. So I always sell puts on stocks that I wouldn't mind owning at any price. So Apple and Costco are my favorites. Costco, I love so much, and that stock has made me a lot of money in the last 6 weeks selling options for. So I really don't mind owning that stock at really any price because I believe in that company. And long term, it's going to make money. So when I sell a put, anywhere from 15% to 10% below the market price, and that's my strike price. I'm looking at an expiration of anywhere from like 4 to 8 months. I'm looking for a beta of zero point 0.8 to 1.3, and I just want to collect the premium. So I'm hoping that these will expire so I can just keep the premium. But like I said, if the stock gets assigned or the option gets assigned and I buy these stocks, then I'm totally okay with that too.
I do like the fact that you do spreads. The benefit of selling a spread is that you can partake in the option itself, but you have some protection. You're lowering your cost premium. So if you're buying an option, whether it's a put or call spread, instead of paying just the price for the option itself, you reduce the cost by being able to sell the farther out strike. Now, in your case, when you're selling puts, are you also selling put spreads or are you just selling a naked put, which is basically a put with no downside protection?
So right now, I'm only selling naked puts, and it's like a really easy beginner option to engage in because it's just one-sided, it's easy, and you're done. Especially if you have parameters in place that you go by. And it's a pretty safe bet, anywhere between like 70% probability of being in the money. But vertical spreads, like a short put vertical spread, is a great strategy as well. It's just a little bit more advanced and something I'm still really kind of learning about.
Good. Now, do you have a larger plan in place? Because the problem is, as we've seen with this past week and the volatility that can come in place, what is your strategy in preserving your wealth and market volatility? Because this is the time where option trading can get very dicey.
Totally. And uh, I really rely on the after hours community, to be honest. I love looking at some of the accounts and traders with more experience than I have, seeing what they're saying about the market. A lot of people who I respect on the after hours community are saying, like don't freak out, it's fine. Like this past month isn't recession territory. Um, we're just in a correction period, and this is a buying opportunity. And I really like the positive outlook because I do believe in, the US stock market. I think it's going to increase pretty much over time, no matter what. So I think moving forward, I will use about 25% of my account, my portfolio for options trading, which is a bit more conservative than what I had been doing this previous month. and the rest of my account will go into, some stocks that I believe in.
Yeah, and that's the important thing that I want a lot of people to realize is that short-term options are really made for day trades or swing trades. So those are trades that you're just basically looking to carry
Mhm,
out maybe over a few days. But the problem with these short-term options is that you're facing it's called theta decay or this time decay that every single day that you hold the option, even if the stock isn't moving against you, you're losing money on the option. So I'm a big fan of leaps or long dated options as a way of leveraging your money. And so then that way, despite volatility like these kind of weeks, you have time on your side to bounce back and the market gets back on track and then you start making money again. But very good. I appreciate that insight on your fantastic portfolio. Again, very solid. I do wish you the very best in your trading future. My pure suggestion is to hold on to the VOO and consider buying shares of your favorite companies like Costco and Apple. Apple happens to be one of my most favorite stock as well. So now I'm
mhm.
going to turn the tables around now that I've had the chance to diagnose your portfolio. I'm going to give you a chance to swing some questions my way.
Ooh, love it. Let me take a look at your portfolio, and I'll shoot you some questions. Okay, how long are you gonna hold on to your Palantir calls?
So the bouncer calls are dated for April. And so I'm planning to hold them for the short term in terms of maybe mid-March at the most. My deal with Palantir was the fact that it returned and filled in the gap in the 80 level. And so unfortunately there's a lot more weakness in the overall market and it continued to tank. So it is a bit of a swing trade that I'm underwater on, but I still feel confident in the market bouncing back. But if not, I'll cut and move on. Again, when it comes to my trades, I don't risk more than a fraction of my portfolio. So it's usually 5 to 10%.
Yeah, and I don't wanna focus too much on the losses right now, but I am interested. What's your thesis on mind medicine?
Oh my God. Okay. So Mind Medicine was this meme stock that I picked up, I want to say maybe 7 or 8 years ago. And it's
Mhm.
basically a stock that went nowhere, and it's just been sitting in the account, and I just have a lot of these random stocks that have been sitting in the account that I basically forgot about because they're not really worth anything anymore. But those were my early days of trading, following people in the Reddit community and just trying and just buying shares. They prod out an interesting thesis. I was like, "All right, I'm down for some," and I forgot I maybe threw in maybe a couple $1,000 at it. And of course, it's worth a fraction of that today.
Yeah. I mean, I totally get that. I feel that same way when I see on After Hours somebody who, like, is so has this deep conviction about some stock, and they post this whole, evaluation of it and their thesis about it, and I'm like, "Yeah, dude, like, I totally believe in that too. I'll swing the bat." And then if it's, the wrong timing or it just doesn't work out, then, yeah, you can definitely lose on that.
Yeah, so I've changed my philosophy now, and I do not invest in meme stocks unless it's just a day trade. So I did after Squeeze Kids mention of RXRX. The thesis sounded
Mhm.
decent, and so I did jump in the early sixes. But as soon as it got into the sevens, and I was out of it. And again, it was just a very small position. I think I only put in like $1,000.
Mhm. So after the steep decline in late February, what's your strategy for March?
Yes, no, great question. So at this point, it's really just cleaning up the portfolio in terms of making sure that I'm mostly in shares. Fortunately, that is primarily my position. I do sell puts, and similar to yourself, I do sell a lot of naked puts, and I think it's important to at least have some downside protection in case of these wild swings. So that's going to be my primary focus is to sort of trim down the amount of puts I'm selling and work with what I have. I do have a little bit of cash aside. I've been buying up some Broadcom as well as some VST and just waiting for the bounce back. Overall, the long game's intact. I'm not too worried. Granted, I was down almost $300,000, but I'll bounce back. I'm not too worried.
Yeah. Yeah, I think, we're definitely in it for the long haul, and, with swings like this month, it can feel really scary. At least that's how it felt for me, even though I didn't lose as much, as you did. But overall, believing in the stock market for the long haul is what I'm looking at too.
Right, and I think that's the main thing is that I've gone through those emotions before, having traded for so long, and so that's why I'm always trying to remember those wise words, and I try to share that with after hour communities that this too shall pass, and so you
Mhm.
cannot panic, right? You cannot try to outsmart the market.
Yeah, you posted that this week. You were like, "Do not panic." You're like, "Take a walk, do whatever." And that was honestly so helpful in the moment because when I see red on my whole portfolio, it can feel really jarring and really scary. Um, and I totally understand panic selling because it's like, I just want to protect whatever money I have in my account and I don't want it to go down more. And it feels so uncertain. And, you just being more experienced and posting that, it really helps.
Right, exactly, and it's only because I've been a victim of panic selling, right? I tried to outsmart the market. I said, "Oh, I'm gonna take advantage of this. I'm gonna sell my shares, go into options and leverage." And it's just a huge mistake when you're thinking emotionally instead of going back to your thesis. We've talked about this. You have a long game intact. So why are you going to change your long game because the market is telling you to, right? If you believe in the company, you believe in the economy, you know we'll be just fine. But these instances happen, these days happen where you see the red, you see the losses, you get scared. You said, "Am I wrong?" You start questioning yourself. And at that point, you're not thinking with a clear head anymore. So that's why I try to put a very similar reminder every time we have a red day, and, of course, this week was very brutal, but again, we will be okay, we will bounce back. The companies that you invest in are very important and make sure they're solid companies, and that's why I avoid meme stocks for that reason.
I'm learning that as well. Hopefully, I won't lose too much on more meme stocks. With the new administration, and all of the tariff talk and seeing how that affects the market. What are your thoughts on that?
Having been an investor in the previous Trump administration, this volatility is nothing new. I mean, this is exactly kind of the same style that we've seen previously. Unfortunately, I thought we would have more time like we did last when the tariffs started coming down, but he didn't waste any time on that. So the main thing is to have shares and then have some cash ready to go. So every time you get paid or whatever, you put it aside and wait for these dips. And then that's when you buy up more shares. So again, options are great tools for a small chunk of the portfolio, but primarily it's a building long-term wealth. And the way you build long-term wealth is with shares. You want to be an owner of these companies and you want to own more and more of a percentage of these companies. And the way to do that is by buying shares.
How much capital did you start with in your portfolio? And how did it grow to what it is now? How long did that take?
I think my first investment was probably $100. And it would have been a long time ago, probably maybe 16 years ago at this point. And I want to say that it started with a mutual fund offered through work. And from there, I actually didn't invest for a long time because I was in a lot of student debt. And once I got my bill from my student loan company and I looked at how much interest I was just paying, I decided enough was enough and I just focused on getting out of debt first. So I spent a lot of time just paying out my student debt and then started, just kind of putting money into a market because I ran into a friend that was suggesting that it's important to start saving for retirement and thinking long term. And that's the hardest thing is thinking for the long game. We always worry about putting food on the table and the bills that come in every month, the utilities, et cetera. But you have to think about the day that you finally can walk away from work, if possible, right? That's the day that maybe you're no longer able to work. Maybe that's the time that you can finally enjoy life again. And so there's this thing called FIRE, which is financial independence, retire early. And so it became to just cutting down expenses and putting all my money away. So that's what I did. I cut everything down. I live in just a very basic house. I own my cars. I don't have any other debt. That's it. I paid off my student debt and my mortgage rate is like 3.5%, which is not terrible, especially considering what they are nowadays, but that's it. And so every month I just put in, probably like 50% of my paycheck into investments and the other 25% go towards bills. And then another 25% I put away for my family and their savings accounts. So roughly 75% of my income is saved every month and it all goes towards the market. I was very
That's
fortunate to
incredible.
buy Tesla early as well, so I think that helped, and that and, Apple. Honestly, just buying these companies and just holding on, and that was one of my mistakes, unfortunately, because the portfolio you see today is probably a fraction of what it would have been if I just bought and hold, and that's why I tell people about panic selling. It really is a bad thing. But if you see Tesla and you look at its chart, it is very volatile, especially the early years, and I still remember times where it would shoot up, 2, 3 times its value and then tank right back down. I remember it going from 400 to $900 at one point and then back down to $400. And so that's very tough pills to swallow, but if I just held on, I had hundreds or almost 1,000 shares at the time, so sad times, thinking back. You learn, and that's why I try to share that with everybody in the community, try not to make the same mistakes I did.
Yeah. Yeah. I mean, it's hard when you don't know where a company's going to go. I mean, I wish my parents would have, put money into Amazon in the early 2000s. That would have been really, really great. But we don't know what we don't know. And as we see the companies grow, I think a great strategy is to look for companies with consistent growth. And then you feel more sure about, this company is going to be successful in the long run. And with Tesla, I totally understand not feeling comfortable with the huge swings and, selling off parts of your position to put into something else that you feel better about. I mean, I think that's, at the time it was right for you.
Yeah, and again, we live and learn, and that's the investment journey. Not every investment's gonna be a win, and I'm glad to hear that you as well have stop losses in place and not writing those call options to the very last day. But with that said, that pretty much is a wrap on our show. I want to thank you, Purple Pants, for joining us today. It was very nice having you, and I am very impressed again with your investment journey. I do wish you the very best, and nothing wrong with being a little conservative. Okay. Now, thank you everybody for listening. If you enjoy this episode, be sure to subscribe. Let me know your thoughts. And if you want your portfolio evaluated, reach out to me. Until next time, stay smart, stay patient, and keep investing wisely. Thank you.